Hello, folks. This is Maria Abreu from Abreu and Associates. Welcome to my channel. If you haven't already, please subscribe. And if you like the content of the video, hit the like button and make sure to share. So, folks, getting into an interesting topic. I think we covered this before, but it's always good to review things, kind of make sure that everybody gets it. Do you still have to pay U.S. taxes with a Dominican pension visa? That is a question by one of the subscribers. And the answer is no. Pensions are not taxable in the Dominican Republic at all. Okay? So that's not a situation that you need to worry about here. Okay? And I've said this is one of the reasons why. Interesting thing, I want to mention this. Pensioners who earn $1,500 or more per month per individual and $1,750 for couple, $1,750 per couple, meaning if one person, you're a couple and one person gets $1,750 a month, it covers both. That's the principle. Interestingly enough, pensioners who earn that from a pension qualify for permanent residency through the investment department. Okay? And I discussed this before. That door is open to them because you're a pensioner that pierces the threshold of what the law establishes as income qualifying you as a foreign investor. So you get permanent residency through the investment department with all of the privileges that brings, and still your earnings are not taxable here. And this applies whether you receive your pension in the States and just, withdraw it here through the ATM or transfer it to your account here, or if you get a direct deposit. Okay, because there are people who direct deposit their disability, or I'm sorry, their pension straight to the DR, which is an option that, the government provides. They allow for people to get their pensions directly here. So it's not taxable. You need not worry about that. Okay. In the DR, you become a tax resident when you live in the country 182 days out of the year. Okay. Now, the Dominican Republic is mostly territorial when it comes to taxes. What you earn here is what you pay taxes on, okay? And even though world income is something that for tax residents is contemplated as having to pay 10% taxes of, that is not something that is normally enforced. They focus on what you earn in the country, okay? So that's something to keep in mind. And what you pay as an individual is usually 10% of net taxable income, okay? But there's what the law establishes and there's what custom establishes, just to let you know, all right? So, but for you pensioners, you're clear, you're free and clear. That's why most people love that category of residency. You're practically you've royalty here. So pretty good, huh? That's something to keep in mind, because who wants to be living on a pension and have to pay tax on that? Especially after the fact that the US taxes that. So it's not something you need to worry about here.